Good afternoon, you're watching Market Sense. I'm George Cherry.
Good afternoon, I'm Ava Andabash, and we've been confined to a very tight range of close to 40 to 50 points for the entire day. Selling pressure is starting to creep in now, so the Nifty is at 53.14. For the Sensex, 17,537 is the level that we're working with. For the broader markets too, it's not a great show of strength. You've got the mid-cap index as well as the small-cap index, which are just about eking out a small gain. And that's your big pressure point. The Bank Nifty futures off by 0.6%. The market breadth is veering in favor of the losing side as we speak. Tata Motors, that's your biggest loser, down by close to 2%. You've also got Hindalco, which is not holding up too smartly, and Hero MotoCorp and Jaiprakash Associates are some of the other big losers today. From the banking space, Axis Bank, ICICI Bank featuring on the list. You've also got a Punjab National Bank, which is off by just about 0.5%. ITC and TCS are some of the other big losers today. Maruti is clearly in high gear on back of the fundamental news coming in on restarting of its Manesar plant. The management, remember, will be meeting today. 2% is the kind of notch up that you're seeing. Bharti Airtel as well as Sterlite Industries featuring on the list, and the entire ADAG pack is holding up smartly. But it's the entire UB group of stocks which is doing very well in today's session. Kingfisher Airlines is now up a whopping 20% today. UB group shares are all up in the range of 8 to 14%. Remember, there is the news that Kingfisher Airlines is in talks with several funds in order to raise some money.
All right, a quick check on the macro space then, and you are seeing the rupee under a fair bit of pressure in trades today, in large part because of this expectation that you will see more dollar demand from oil marketing companies in the currency market, simply because you've seen the price of crude oil rise to a 3-month high. So Brent crude is trading at a little above $113 a barrel. Last check it was $113.6 a barrel. So you are seeing some pressure come in on the rupee. It's down by 10 paise from Friday's close, so trading at 55.38 in the market as we speak. Now, the fact that you are seeing oil prices climb up is raising some amount of concern in the fixed income markets as well, because of this whole effect that it will have on inflation. Over here, you are seeing yields on the 10-year benchmark bond climb. It's climbed as high as 8.19% from a close of 8.16% that we saw last Friday. So overall, it is oil prices that really are weighing on the currency markets and the fixed income markets in trades today. Oil holding well above $113 a barrel.
Okay, but very quiet for the equity markets as well, as already pointed out. How should you be approaching them? Let's get on board our technical experts. Rajat Bose joins in from Kolkata from rajatkbose.com. Prakash Gaba, CFT of prakashgaba.com, is here with us in Mumbai. To start off with, Rajat, on the index, do you think that all in all it's going to be a fairly range-bound week that we should brace ourselves for?
See, the problem here is that Nifty doesn't stay range-bound for a very long period of time, and already we are seeing this range-bound movement for quite a few trading days, and probably there has to be either a breakout above 53.50, and that has to be a decisive one, not just the kind of breakouts that we saw on Wednesday and Thursday last, but we need a solid breakout above that, or we would be seeing the market coming down at least to test 5280 to about 5260 levels, and that is quite a possibility. As of now, if you see the index breaking down below, say, 5307 to about 5295 kind of levels, then you will see it going down to 5280, and once that is broken, then 5263 to about 5243 would be the next major support area to watch out for.
All right, Rajat and Prakash, we'll come back to you in just a moment, but for now, let's go across to our colleagues from the research team, Gargi Parikh and Ajay Sharma. Gargi is going to walk us through the unusually moving stocks and trades today, and Ajay is going to tell us what the buzz on the street is. But Gargi, let's start with you.
Well, take a look at NMDC. They're expected to announce their first quarter results today. Seems to be a good set of numbers. Looking at the stock reaction, at least 2% increase coming in. We're expecting net sales at about 2850 crores. That's versus about 27,880 crores. In fact, 2,780 crores, in fact, from last year levels. Net profit seen at almost 1850 versus about 1800. A small increase that we are expecting there. Quarter on quarter, surely the numbers will be very good, considering that last quarter the production was low and there were issues they were facing through the mining ban. This quarter somehow coming back to original levels of that they had earlier from Bellary. So iron ore volumes expected up if you compare it with last quarter. EduComp, the decline we are expecting just ahead of the Q1 results. Revenues at about 376 crores versus 513 crores. That's the estimate on the street. Net profit also almost at 35 crores versus about 60 crores. We are comparing on a quarter-on-quarter basis. So not a very great quarter that we may see for EduComp. Kingfisher, and that stock is on a roll today. Very good volumes also seen. Almost 11%, 12% increase the last time I checked that stock. They've almost halved their operating losses to almost 204 crore rupees. Net loss of almost 970 crores. That I believe market has perceived it to be better than what they had earlier estimated. Currently about 17.5% increase coming in on Kingfisher.
Okay, thanks very much, Gargi, for identifying some of the smart movers. What's the dealing room chatter? Let's take it straight to Ajay. Ajay, Tata Steel is pretty subdued ahead of its numbers. What are the dealers talking about?
Well, some fresh shorting activity happening in Tata Steel ahead of the numbers which are actually slated to be out in market hours today. That is quite surprising, but 610 crore is the buzzword on the street, and that is why if you compare it with 650 crore of the estimate, it looks on the lower side. Probably that's why some fresh shorting being seen. But from the mid-cap pack, Vivimed Labs is one stock where the numbers are expected to be very good, and that's why some buying is actually happening. The stock has gone up, quite a lot in past couple of months. So if you pull up Vivimed Labs, we'll see how the stock is actually trading in today's trade. Pharma in general has seen a lot of buying happening from the dealers, up just about 1 rupee. So we are expecting, this is actually the street estimate, that the profit may actually double, and if that kind of number does actually come about, the stock is expected to rally. That's why a lot of dealers are taking positions ahead of the numbers coming out from Vivimed Labs.
All right, Ajay and Gargi, both of you, thanks very much for coming in on the show and walking us through those stocks that are in focus. Now, one of the highlights of the latest quarter for ONGC has been the discovery of additional oil resources in the Mumbai offshore field D1. The company's chairman, Sudhir Vasudeva, hails this as one of the crucial discoveries that the company has made, and which may add up to something like 60,000 barrels of oil to the company's daily output.
The one which is significant is this D1. D1 field we have been producing. This is a marginal field in the western offshore. We have in the first phase we are producing about 12,000 barrels a day from this, and the reserves are about 19 million tons. In phase 2 we have increased, we have hoped to increase the production to 35,000 barrels per day, and with that the reserves, total in place oil reserves will be about 80 million tons. But while drilling this second phase, we have found about 140 meters of new column, and which has been electro logging etc. has been done. The well is now under perforation, has been perforated, it is under testing. So based on the electrologs, we have already notified this to DGH, and the reserves are expected to be of the order of about 50 to 60 million ton more. So if we add all this, total reserves from D1 field, this D1 1, D1 12, 14 put together is about 140 million tons. After testing, we'll have more clarity on this, but this thing back of envelope, we can say something like 60,000 barrels a day. So this is the discovery, the big discovery which has been eluding ONGC for a long.
A big discovery and a great set of numbers which surpassed the ET Now expectations. The bottom line grew by close to 48%. Prakash, let's get it to you. It's tapered off from its high of the day of 290. Where do you see ONGC headed, and what are the stock picks that you've got for us?
Well, ONGC has found a typical resistance around the zones of 290-95 zones. It's difficult to cross zone. It's a massive resistance. So I feel that ONGC can slide down to levels closer to 270 or so. So there is some kind of weakness coming in, which will bring perhaps the market down. I have this Axis Bank that looks weak to me. I would say that I have a tight stop about these levels closer to around 1070. On the downside, we could see levels closer to 1020. And second stock is the EduComp. It's looking typically down, then sideways. Looks like a downmove should start now. It's building up. I would have a stop about 160 and expect EduComp to slide down to levels closer to 150 in a day or two. And third is Hindalco. It's got tired. The way it went from 115 to 124, 125 zones, it's got tired in the upper regions. I think it's a sell here. Have a stop about these levels of 127. I think it can slide down to levels closer to 123 or maybe even lower. So all three sells, Axis Bank, Educom Solutions and Hindalco.
Thanks for that, Prakash. Time for a quick break right here on the show. But on the other side, it's the fourth day of declines for SBI. The stock hits the lowest level in 3 months after a series of downgrades from UBS and Deutsche Bank post its earnings. Is it a good time to buy the stock? View on that, as well as lots more after the break.
You're watching Market Sense. Now, Pradeep Chaudhary, Chairman of State Bank of India, is of the belief that funding 200,000 crores to telecom companies is not going to be a big trouble in the current environment for banks, given the advantage that they have of having spectrum as collateral.
Maximum burden or the load of the slowdown that has happened has come on the mid-corporate and the SME sector. So this quarter, I think second and third quarter NPA accretion should be much slower, and a maximum 3,000 crore net slippage is what we are targeting for. On the net restructured book, the maximum loss that we anticipate could be anything between 3 to 5%. So on a 36,000 crores, if we have to take a hit, the hit could be anything between 1,000 to 1,800 crores. This quarter and the next, we expect an aggressive increase in the loan book, consequent improvement in the net interest margin. So our telecom exposure is to the top rated companies.